find access to those resources quickly, and really point out the fact that no matter how little it is, it has an impact. And just to piggyback off what Sanchali said earlier, with the changes that are happening right now, there are opportunities for us to look at those businesses that are actually, combating the emissions problem that we have. And just an example would be a small business that might turn, restaurant grease trap into biofuel or some other kind of energy, which is really exciting. And at the same time, that small business is creating jobs to do so. And so there's all these other amazing impacts that happen from, people just really, I think, having accessibility of knowing where they can put their money to actually have impact, and helping them realize that even $20 counts, because it can go somewhere that can do really amazing, great things.
And I would also add to that and everyone on this call is pushing this side of it. It's on us to make it more feasible for these types of products to be used more widely. And by that, I mean, it's not just get to the watermark of where more traditional service offerings are. It's let's exceed that. Let's create an offering that people really enjoy using and get behind in different ways. And that's through different tools, different visualizations. It's going to be making that jump so that folks want to get involved. It's not kind of dragging, let's not drag our feet over the climate line. Let's say this is really cool. This is making a difference and I enjoy it.
Yeah, I think just to build on both of those points, one way to think about, I think, money and climate is just to think about climate the way we think about money. Like, we've known forever that if you save $20 at a time or $5 at a time, and that principle seems like a no-brainer when we think about savings from a financial standpoint. But for some reason, when we think about climate, it seems like $20 doesn't matter. And similarly, I think we know that when we put our money behind stocks in the stock market, we are putting a vote in that company and that we believe in it and that that's going to go somewhere. And I think we should think about our power from a climate perspective similarly.
That is a very good point. Thinking about climate the way we think about our money, because in the end, that is the long-term goal, and those natural resources are the ones that we will have, not necessarily the dollars in our bank accounts. We don't have any questions from our audience yet, so please do ask in the Q&A or raise your hands if you want to ask a question live as well. We have a brave soul who has raised their hand. Ravi, if you don't mind allowing it.
Yeah, go for it. I'm switched to my phone because my computer is in the earth. I'm trying to fix that, but let's see. Or ask a question in the chat even.
All right, we have a comment from Haneid, I believe, saying, just a suggestion, there are many events which happen in the scientific community and there's a very large support in this area, guessing in terms of the area of financial change to support climate change. Another question is, what is your plan to get customers and people engaged in this area? I'm guessing in terms of how do you get customers activated for your various products?
Yeah, well, for Atmos, it's early days, so we still are coming up the curve there. But I would say that again, it's spread awareness of the issues. It's making sure that full information is out there, and then ensuring folks know what our product is like and why. It's important to use something like this. If it's $20, if it's $50, if it's $100,000, So I think that that's on building some unique tools for people, ways that benefit them. So if folks can say, oh, I want to use this product because in the end, I save money, or I can do X, Y, or Z. I think that that's where we can really drive a lot of value. That's my answer to that. Yeah.
Yeah, and I would agree with that. For us, it's all about visibility, and as I mentioned earlier, helping understand what CDFIs are, because that is our main investment vehicle, are those organizations. And so, just on a note of political agendas right now, we've had the stimulus bills come out, and CDFIs have been mentioned in it, but for us, it's about helping people understand and educate what they actually do. So they hear that phrase and they don't know what they do. So that's one piece of it for us. And then the second piece is really what Pete talked about, making sure that the products align with what people want, and giving them liquidity at the same time that we're giving them the opportunity to really, again, feel like they're making a difference. So making it a very simple transaction that they can do literally on their phone, right? And not have to do anything super complex. So I think those are our two big items: visibility and simplicity.
Definitely agree with those points. I think ease of use is so important, especially with the types of products that we're all working on, where we're trying to present an alternative to the status quo. And we're doing the status quo is the easy thing. So we have to make what we're doing really easy too. And I also think that there's some element that we have to figure out, maybe as a sector, of how to make people look really good. Because if you are doing something good and you get to look good while you're doing it, then maybe that's a big incentive to move away from doing what everyone else is doing.
Thank you. We have a question from Casey. How do you recommend thinking about valuing the trade-offs with fees and returns versus using one of the very low-cost big guys?
Yeah, well, two things. I think that it's on all of us to reduce that hurdle. So, we acknowledge that friction is there. Some of those bigger banks have some really low fees. Some don't. Some kind of charge you an arm and a leg and ding you everywhere they can. But it's on the industry to reduce that friction so that you don't have to make that be an issue of why you would not change. So that's goal number one. I think also if there is a little bit of a trade-off on some of those transaction costs, finding ways to understand that really is kind of enabling change on a large scale, and understanding that those will come down over time.
Right. Maybe Stacy, do you have anything to add there?
No, I think that sums it up pretty well. I'm kind of reflecting on it a little bit, but I think there's probably a lot of misunderstandings about what is actually entailed in being able to put your money where it works, and so I think I'm just going to keep going back to just the simplicity of it, and making sure that it's just clear from the start what they can do, and what's connected to that from the transaction standpoint. I can't stress that enough, just the simplicity of it and transparency.
And just to throw one more thing in there, Stacy, I don't know what the yield is right now, but 2-ish%, something like that.
275.
275. I'm not sure there are too many big bank offerings out there delivering that much good for 275 with liquidity.
Yes, good point. Thank you for bringing that up. We definitely, want to make that known too, that it's not a concessionary return by any means. So appreciate that.
We have a question specifically for Sanchali and Joro from an anonymous attendee. I think people would definitely like something like Joro that is easy to use and can help track an individual carbon footprint. On the other hand, people might not like the idea that an app outside of their banking app can track all of their credit card and debit card purchases. How have you dealt with this question of privacy and security, or has the issue not come up before? I'm
Really
guessing it has.
important question. It has definitely come up, something we think about a lot. There's this trade-off that we are trying to manage between making life easy for users, but also not encroaching too much on their data. And because energy does touch so many things we do, it's nearly impossible to track that in an automated way without trying to ask for a sensitive piece of data. Credit card being the most useful because you can look at trade-offs across energy domains and it can help inform your consumption decisions. So it can be directly actionable, whereas some of the other data feeds like home energy use, you may only see one part of your energy usage and it doesn't lead to direct actions. So there's certainly trade-offs. What I would say on the sensitive banking information is that we try to do as much as we can, to make sure that that is as secure and seamless as possible. So we actually don't store any of the sensitive banking information ourselves. We use an API called Plaid, which is the industry standard in the fintech space for connecting securely to bank accounts and credit cards. It's the same API that Venmo uses, or probably any other Robinhood, any type of fintech app you may be using. Plaid is probably already the go-between for your financial information in your bank. And by doing that, we only are able to access the transaction level information on the amount purchased and then translate that into a carbon footprint. So we're trying to take the same approach that other fintech apps have taken, like Robinhood, like Venmo, to protect user data as much as possible. And we don't have a business model that requires us to sell data. We make money right now based on offset purchases, and in the future, based on corporate revenues, hopefully, we'll see. But we will not be selling user data under any circumstances. So that data is secure and safe.
Thank you. And we have a live question from Teresa. If Ravi, you'll please unmute her.
She should be unmuted. Teresa, are you still there?
Hear me?
Yes.
Okay.
Yes, we can.
Yeah, okay, this is a question for everyone. So I think you are, I'm in the middle of the career change and I'm kind of exploring the new area. So this is a question about the career, why you all decided to solve this issue. There are like thousands of other issues out there, but why this climate change and this topic?
That's a great question. There are many, as you said, many issues out there and causes that need attention. This one is climate change is the most meaningful to me, and has been for as long as I can remember. Why that is, I'm not exactly sure. I think I'm just wired that way, but I see this as being one of the most important things we can be working towards, and I know that everyone on the phone probably agrees.
Yeah, I agree. I started working on climate because it kept hitting me over the head. I really wasn't planning on working on climate for my full-time job before. I actually worked in international development for the first part of my career and was really passionate about emerging markets in South Asia and East Africa. But the more I worked on projects there across agriculture, economic development, infrastructure, it kept coming back to climate change no matter what sector I was working on. And I realized that if we were going to have any chance of all of the rest of the countries developing to the state of the more developed countries in the world right now, we're going to have to address the climate change issue because it's so intertwined with equity. So I felt like I had to work on it.
Yes, and I would just build on that, because I think the biggest word for me that used was, the whole equity piece. And for C-Note and for myself, being in this industry for a long time, there's just a lot of disparities in the world in terms of how money helps certain groups of people, and climate is just another one of those areas. And we've found that where there's inequality in other ways, climate is affected, even in most cases, I would say, more extraordinarily in those areas as well. And so it's kind of come up as one of those areas where it's just evident that certain people with access to certain resources have stronger, safer, more climate conscious communities. And so it's really relates all back to just the whole, equality, and how can we help the world, be better in general. And climate is just, without a climate, we have no, without a healthy climate, we can't do anything else. And so it's as simple as that.
Great. Thank you all very much. Appreciate all those insights, Sanchali, Pete, and Stacey, about how we can use our current cash assets essentially to make a difference and help fight climate change and build a more equitable world, both socially and environmentally. Thank you. So we'll move on to passive investments, which are defined as broadly referring to a buy and hold portfolio strategy for long-term investment horizons with minimal trading in the market. So thinking about placing and holding your money somewhere and acting on it. We have Andrew Rodriguez, CEO from Change Finance, Ethan Monroe, CEO of Etho Capital, and Noah Strauss, Portfolios and Client Solutions Director at HIP Investor, to speak with us today about this topic. And we'll kick off with Andrew. If you'll quickly tell us what you and Change Finance are up to.
Sure. Thanks for having me. So I'm the CEO and Chief Investment Officer at Change Finance. We build performance-oriented exchange-traded funds on the New York Stock Exchange for sustainability-minded folks, like folks on this call. And what we do really, and what our goal is to really push the bounds of what you can do in public markets and how much impact you can get. So ESG is very exciting to folks now, and we think we can go right beyond it. And so we do. We use data and research from the Stockholm Resiliency Institute, some of the work from Donut Economics by Kate Rayworth to get at deeper impacts. And so the product that we have out is like the S&P 500, but it has the lowest carbon footprint available of any large blend ETF product like this, a high sustainability score. And it's basically the equivalent of taking 17 cars off the road every time we get $1 million that leaves the S&P 500. So there's a lot that people can be doing to make impact in public markets. And we think, especially on our side of the table and with the colleagues you'll hear from next, we're all headed this direction of really pushing the needle, because we can, on what impact in public markets looks like.
Thank you, Andrew. Turning it over to Ian to talk to us about Etho Capital.
Hi, everyone. So Ian Monroe from Etho Capital. And in a funny coincidence of our COVID craziness, I'm actually just about 15 miles north of Andrew in Mendocino County, California, in very rural Northern California right now, on the small farm where I grew up, which is getting to the last question that was asked. Really the why of why I'm working on climate change started from growing up on a small farm and just seeing the impacts here. And in particular, having a nightmare since I was a little kid about wildfire destroying my family's farm, and seeing that the science made it more likely to have that happen. And then, actually similar to Sanchali, I went into studying climate impacts in school, and then international development contexts, working all over Asia, Africa, Latin America, founded a platform called Oro Eco, which actually is doing things very similar to Joro to track your personal climate impacts. And out of that, we started to look at the climate footprint of companies in your personal investment portfolio. So that's what turned into Etho Capital, and what I now spend most of my time on, working in climate finance. And I still also teach courses on climate solution scale up at Stanford University. So unfortunately, that nightmare I had as a kid about wildfire destroying my family's farm came true a few years ago. In 2017, we were in the middle of one of the big wildfires that swept through the area. And so climate has become certainly a very personal issue, and in the context of experiencing climate impacts and international development all around the world, I've seen many others whose lives are getting touched by this. And really, we need to move our money out of the problem into the solutions as quickly as possible. And the cool thing that we're showing with Etho Capital, which is the same with essentially everybody else on this call in different ways, is that shifting money into more climate efficient companies, those that have less pollution per dollar invested in essentially every part of our economy, every sector, every industry, the climate efficiency leaders that have less pollution relative to their peers generally are financially performing better. And that's the core of the first piece of the analysis that we do for every company we look at Etho Capital, is looking at the full life cycle climate impacts that a company has. Importantly, not just looking at what's going on at a company's direct facilities, what are called scope 1 and scope 2 emissions, but also what's happening throughout the full supply chain, all the climate impacts that link to the raw materials, to the transportation energy, to the semi-finished products that go into providing all the products and services that a company puts out there into the world. And then also increasingly, we're looking at the climate impacts of the use phase of companies' products and services, as well as disposal. So we add up all these life cycle climate impacts, which is part of what I teach at Stanford as well. And then we find the climate efficiency leaders, those with the least pollution per dollar invested in essentially every sector of the economy. We do take out companies we consider inherently unsustainable or irresponsible, like fossil fuel companies, weapons companies, private prisons companies, tobacco companies, et cetera. And the really cool thing is we're showing that you can build indexes from the bottom up. So like Andrew said, something that's similar to the S&P 500 or the Russell 3000, and actually outperform those indexes in terms of financial performance while dramatically reducing your climate risk exposure and climate pollution at the same time. So our flagship index here in the US is called the Etho Climate Leadership Index. It's been rating since 2015. And as you can see in the slide here, it's substantially outperformed S&P 500, Russell 3000, an equally weighted mix of the US market and essentially every segment of the US market, as well as the global market benchmark, the MSCI ACWI, All Country, All World Index, launched in 2015. So long story short, with Etho, we're really showing how investing in more climate efficient companies essentially is investing in companies that are just better run, more operationally efficient, and probably also better in terms of future proofing and resilience planning for the crazy future we may have ahead, not just with climate, but also with things that can be connected to it and certainly are having a large influence on it, like what's currently going on with our COVID crisis. And I'm happy to get into the intersections with COVID, climate, and investing in Q&A. So thanks again, and look forward to diving in a bit more.
Great. And that aspect of resiliency certainly jumps up well to our introduction by Noah Strauss at HIP Investor.
Thanks, Melanie. And thanks, Melanie, for asking everyone to introduce themselves in the chat. It's really cool to see all these awesome attendees we have. So I'm Noah Strauss from HIP Investor. HIP Investor is an impact investing ratings and analytics company. We rate the social and environmental impacts of over 120,000 publicly traded investments like stocks, bonds, funds, ETFs, portfolios, 401ks. Aside from our impact ratings, which focus on both social and environmental impact, we also have UN Sustainable Development Goal ratings, climate threat resilience ratings, which is this map you see on the left, though a little pixelated. This is our mapping of the physical risks and community level resilience of all the United States on a county by county basis. You can't talk about environmental issues without talking about environmental justice. As you can see, there are certainly sections of the United States that are more exposed to certain risks and also less resilient due to community health, vulnerability, lack of policy interventions, lack of social structures. The same is unfortunately true with COVID. We're working on another project right now mapping COVID vulnerability across the United States, and the same issue shows up. Communities of color, low-income communities are disproportionately impacted and left vulnerable. The last thing I want to mention right now is that HIP Investor runs several investment strategies. One of them, most relevant maybe to Earth Day, is our science-based target strategy. So that takes the universe of companies that have declared public science-based targets for emission reductions based on the Paris Accord and our need to reduce warming by 2 degrees. We take that universe of companies and we turn it into an investment portfolio based on the goals that those companies have set, how well they are working to meet their goals, or their actual reductions year over year, meeting the goals they've set. So like everyone else has said, this is hugely important stuff. Personally, for me, I come from the environmental justice perspective. My background is working in government and nonprofits before coming to HIP Investor. So happy to talk about any of these parts in our next discussion. Thanks for having me. Pause here.
Thank you, Noah. And for our participants, please make sure to use the Q&A function to ask your questions for our panelists. We'll open that up in a couple minutes, or if you so dare, raise your hand to ask a question live like Teresa did at first. Noah, since you mentioned your background as an environmentalist and the advocacy world, I'm curious, Ian and Andrew, if you want to share what brought you to create your own company and to where you are today.
Sure. Happy to go first while Ian gets his camera on. Really for us, it was seeing, we got bit by the bug of scale. We had some folks, we were at a separate firm that was investing and doing this for individuals. And a big mutual fund family came and said, hey, we think we want to do exchange traded funds that have impact. And we didn't believe them, but we did believe that that was actually the way to have scale. And to jump up a notch on terms of what impact could look like. You know, funds like ours that, you know, reduce these carbon footprints, funds like Ian's could have billions of dollars in them, driving money towards harm instead of healing. I really think that the financial system is upstream from everything we care about. So it seemed like the opportunity was to get money into healing instead of harm, and then maybe we'd get a bit more of that in the world. So that's why we started Change Finance.
Yeah, thanks, Andrew. And hopefully you can all hear me. Without going too far in my life story, I give you a little slice of it already, but as mentioned, I worked at international development and saw a lot of disconnect, particularly working in China and seeing the pollution there and realizing how much of that is really our outsourced pollution that's connected to all our consumption choices. And initially, I thought I'd focus on the consumption side of it, trying to get information and incentives in the right places so that we could all make more sustainable decisions just from a personal spending and lifestyle choice perspective. And so that's where OroEco came from about a decade ago when we started working on that. Was very similar to Joro, tracking your personal climate impacts through your personal financial transactions, initially with a data feed from mint.com. With that, we started looking at your personal investments and saw this really strong relationship between climate efficiency for companies, particularly when you went beyond what companies reported about themselves to calculating their full supply chain impacts, which generally is not what companies report, but actually is by far the biggest part of their impacts. In many cases, the impacts of a company is what's connected to its supply chain. When you add in calculations for that, modeled through how a company is spending its money, not just what it's putting out there in its corporate social responsibility reports, that seems to provide this really strong signal for which companies are more efficient and better performing. And so that was the aha moment that turned into founding Etho Capital. I never thought I would be running a finance and investing company, but seeing that financial performance relationship was what caused us to dive in and want to not just be descriptive for people to calculate the carbon footprint, but actually create investment products that empowered people to decarbonize their portfolios and perform better at the same time. And that also coincided with seeing this trend towards index passive investments, both for individuals buying ETFs and from institutions like CalPERS and CalSTRS and pensions and sovereign wealth funds beyond that, that increasingly have been shifting towards essentially buying the entire market through buying broad-based index funds. But it's become a major problem in terms of climate change because it's essentially zombie money that is just going in and out of the market and buying everything, including all the energy companies and all the oil and gas services companies at the same time, not taking into account these transitions that are going on in terms of climate impacts and also in terms of clean technologies. So it was that mix of impacts and seeing solutions that just were really compelling from a financial performance perspective and these win-win scenarios that got me doing what I'm doing now with Etho, where I came into this as a sustainability science and engineering geek, never thought that I would turn into an international development guy, a tech guy, or now a climate finance guy.
And hopefully those stories can also inspire all of our participants to think of themselves under a new lens, since I'd like to think that everyone attending here can now consider themselves an impact investor in some way and start having that impact beyond what their traditional field might be or expertise. We have a question around fees for investments, and it just disappeared from my Q&A, and how to compare fees for different investments. Can the three of you perhaps talk about that for your various products?
I wrote in there that that's one of the things we have to be careful about in terms with the SEC on what we can say on a phone call. Ian, can we just speak openly about that to your understanding? Or what I said in the answer is that typically fees for ETFs like Ian and I have can be anywhere from 0.01% at the very bottom end all the way up to over 1%. And that but these tend to have lower fees, under 0.5%. And so both Ian and I are in that vein. Some of the biggest firms get to be cheaper just because of their scale and because they don't want people like us to exist in the marketplace. But ETFs, generally speaking, are low fee investment vehicles for people.
And certainly cheaper than mutual funds in general. And with Etho now, actually, we're quite excited to be collaborating with New Day to also do separately managed accounts, which potentially can have lower fees as well for larger investors. But in general, yeah, the fees for what we're doing are very competitive. And if you look at performance net of fees, generally, we can never promise, the SEC will be happy to hear me say that past performance can guarantee future results. But with all that said, generally the fees have been more than paid for by outperformance relative to common benchmarks.
I'm gonna jump on that plug for our partners at New Day Impact Investing, who host several HIP strategies there for low fees for retail investors. The one other thing I just wanted to touch on briefly was a question that came up in the last session about which specific metrics investors should be looking at to rate their investments. And the short answer, unfortunately, is it depends. The longer answer is, for corporates, we look at HIP across a variety of pillars. We look at the effect on human health, the effect on wealth, the effect on earth, equality and trust. So that can be anything from CEO to employee pay ratio, the percentage of workers who receive insurance, the net emissions of the company. And similarly in our muni sectors, it depends sector by sector. So for water utilities, we look at the cost of water for individuals in different communities, the amount of contaminants in water. For K-12 school districts, we look at school performance in relation to revenue to take a justice angle on that. For governments, we look at community health. So there's a variety of metrics. HIP uses about 3 million data points in whole across our ratings universe. So happy to talk in detail about that more at a later time, but just wanted to address that question.
And one more thing that I think is really important to toss out there when evaluating climate-related strategies, particularly passive index strategies, is there's a pretty wide range of quality of the environmental, social, and governance, aka ESG data that products are incorporated into their methodologies. All of us on this webinar, I think we like each other because we're trying to do it in a way that we think is authentic and really goes beyond what companies say about themselves, trying to get a better picture of what companies are really doing. But there are a lot of products out there because ESG investing, climate investing has become a incredibly popular space where almost every investment product creator now has something that they're claiming is more green, clean, sustainable, etc. But the reality of a lot of the products from larger investment product creators, including passive ETF fund creators, is they're generally working with data to just regurgitate what companies say about themselves in their corporate social responsibility reports. And so you're really just getting companies, products based on those companies that are the best at marketing themselves as sustainable and greenwashing, not necessarily the companies that actually are the leaders. And with climate data in particular, as I mentioned, it's really important to look at the full life cycle, including the supply chain and the use phase of climate impacts for companies, which companies almost never report. And the more common ESG and climate products out there from the larger, at this point shall remain nameless, but you can probably guess who they are, fund creators, pretty much always leave out the supply chain scope 3 side of things. And therefore they're missing generally over 85% of the actual climate impacts, and may even tell you what's supposedly a fossil-free or decarbonized fund that still is filled with oil companies and oil services companies like Halliburton and Schlumberger, et cetera. And I think everybody else on this call removes all those companies, but you really need to look beyond the label when you're looking for passive product options, because there's good stuff out there, and certainly we're biased to think what we're doing is good, and there's also a lot of crap that really is just greenwashed.
If I can add in, I think there's a lot of fascinating data coming out that folks like Ian and Noah and we all are using to go beyond this ESG that we're talking about. And on the social side, there's data available right now on hospitality companies and whether they're training their workers to disrupt sex trafficking. And all ESG funds should start measuring on things like that, right? There's a lot of pieces out there that are coming really quick for all of us to think about the impacts we can have and how material they are, both on people and the planet, as well as on returns. So yeah, I would agree. I think that there's places that we're all going that don't yet come out in the data. And we work, Lila, who will talk in the next section, with fossilfreefunds.org and others who are helping us get our message out by giving us good tools that people can measure our funds and understand how we do on everything from tobacco to weapons to sex trafficking and you name it. So that's wanted to add that in there.
Great, thank you. So we'll open it up to audience Q&A if you'd like to raise your hand or ask a question through the Q&A text function. We do have a question around the 2 or 3 key changes that we should see in climate outcomes by Earth Day 2030. So in the next 10 years, what would you like to see when it comes to climate outcomes?
That's a tough question. I feel like the answer by 2030 needs to be an end to the fear of climate change, right? An end to the reality that is coming, and probably that fast. That's big. So I think what we might be able to see by 2030 with all of our work and just the way economics are changing is an end to this common use of fossil fuels. There's a really smart man named Tony Seba talking about the greatest disruption of all time. I don't think it's exactly how he frames it. But he's saying there's these 4 exponential technologies all at the same time that are taking off. And because of that, we'll see an end of fossil fuel usage. in a very dramatic sense by 2030, and that's the price of solar, the price of batteries, the electric car, and the autonomous car. And the way they're all scaling up in their cycle at the same time is really encouraging for what demand will look like for fossil fuels and what we'll be using it for by then. So that's really a goal I'd like to see come to fruition, and we're working on helping from our angle.
And just if you look at the science around climate and where we need to go in terms of decarbonization, something I talk a lot about with my students at Stanford is that it essentially has to be moving in a major decrease of fossil fuels as quickly as possible to get to zero fossil fuels as quickly as possible. And a silver lining out of COVID, which Sanchali brought up a little bit already, is that we actually are showing that another world is possible, that we can have a lot less transportation, still get a lot of work done, a lot of the same work that could be done at conferences, just done via Zoom and other telemeeting options. And we're seeing oil prices that are totally crazy. I'm sure everybody saw that oil actually went negative because now our oil capacity storage facilities are so full. And even if oil prices are at $20 a barrel, those oil prices can't sustain the industry. So there's been some interesting pieces being written that this is essentially the beginning of the end for oil because of all the viable, increasingly available, cheaper and cheaper alternatives that Andrew brought up with cheap renewables and cheap electric vehicles. And then also because of what is projected to probably be a sustained drop in demand because of less transportation for at least the foreseeable future. And I'm hoping that actually all this remote work is encouraging just remote distributed workforces to become the norm moving forward. And part of that is a selfish hope that I've always wanted to live and work on the small farm where I currently am. And I know that many would not like to live in more rural areas, smaller cities, smaller towns, but increasingly like they need to be in mega urban centers like the Bay Area, where I am most of the time, in San Francisco or New York, Hong Kong, etc. I think now we may actually show that it's more resilient for companies to have remote distributed workforces and just make that the norm as opposed to the exception. And that then is something that really decreases energy demand for commercial buildings, as Anjali brought up, as well as decreases demand for transportation moving forward, and really accelerates this oil endgame and takes us off our fossil fuel addiction even sooner. And of course, the sooner the better in terms of climate solution scale up. So that's something that I'm optimistic about as a silver lining, is remote work really becoming the norm. And of course, it doesn't work for everybody in every context, but even a lot of services can now be delivered. And increasingly, we're seeing how economies can be reorganized to make that work. Even here in our small community in Mendocino County, a lot of stores that have been brick and mortar are shifting towards doing delivery, and people are supporting the local economy by supporting this new way to keep those stores going.
Noah, want to close us off?
Yeah, sure, thanks. 10 years from now, what I'd love to see, I'm going to take kind of a high level answer. I'd love to see an economic system that more fundamentally recognizes the barriers we have on our planet. Someone else mentioned donut economics. I think there's a ton we can do within the impact investing space and capital markets. I think there's also more fundamental needs for changes in the way we think about the relationship between our economy and our planet, bringing the politics back into the conversation to acknowledge the ways this is playing out differently around the world. So I would love to see a system that maybe includes, carbon credits more broadly, carbon taxes, but a big change to our economic system in general, I think, would be my vision for 2030. Thanks for asking.
Thank you, Noah, and thank you to our three panelists on the topic of passive investments. So moving on from here over to much more active investments, we have three great panelists to discuss this topic and to some extent have been seeded by the past conversation or around how can we have a much more active role in our investments. So we first have Doug from New Day Impact, followed by Kristen Hull, Mia Impact Capital, and Lila from As You Sow, that will have introductions from, and then open up to discussion and have Q&A. And for those that are just joining us as participants, please continue to introduce yourselves through the chat function, and make sure that you send it to all panelists and attendees if you want to network within each other. All of the questions that are asked through the Q&A function, I encourage our panelists to also answer those questions in the Q&A function to respond to our participants. But we will also address them for these three panelists that you see on the screen during the Q&A section. So Doug, over to you to introduce yourself.
Melanie, thank you very much. And I woke up this morning thinking that it really is amazing that this is now the 50th anniversary of Earth Day, and that we have, at least for most of us likely on this call, been working on this for a very long period of time, even though the movement started well before that. And I'd also like to give a shout out to the number of organizations that are participating in the ClimateLink event this afternoon that are based in the San Francisco Bay Area. And I like to think about the fact that this community has really become sort of an innovation hub built around sustainability, which is excited to think about regarding our roles as leaders in this field and creating new jobs and moving the whole effort forward. So it was about 3 years ago that we started the New Day platform, defined as New Day Impact Investing. And our story really started with this idea of what is the impact that we could have if we were to unleash the vigor for this enormous set of responsibly minded investors as they sought to engage and align their financial and investment strategies with their personal values. So we started to think through the creation of a platform that allowed for access for virtually everybody. And I've come from the traditional wealth and asset management side of the business, and for many years had specific responsibility over the development of a number of impact investment groups at those organizations. But one of the challenges that I found at these organizations was that people that had a lower level of financial affluence and influence and didn't have the same level of financial education were sort of shut out from these opportunities. So we were determined to build this platform that allowed for the delivery of a lot of information built around not just sustainability education, but financial education, financial empowerment, inclusion, that brought our entire community of individuals to a place whereby they could participate. And so over that period of time, we ended up building what are these core set of investment strategies that are largely quantitatively driven, built around the United Nations Sustainable Development Goals that include things like gender equity, inclusion, and diversity, sustainable agriculture, animal welfare and wildlife conservation, stakeholder capitalism, which is an effort that we started last year, which is really identification of this issue or identifying organizations that are making deliberate decisions for all of their stakeholders, not just their shareholders. We do a lot of work in the investment space in ocean health, clean water, and then have broader strategies associated with climate action and global impact equity. As I think a number of people have mentioned on the call today, we knew that from the very beginning that if we were going to move the needle in deep transformational ways, that this needed to be a collaborative effort between not just the work that we're doing internally at New Day, but all of these other impact players that are a part of our business today. And so we very much have this collaborative notion that by working together is the only way that we're going to solve these problems, whether we're individual citizens, impact organizations, members of the faith-based community, of government, or of the corporate world. And so what our intention is really to democratize access to values-based responsible investing. So this set of what are now 12 investment strategies we deliver in the New Day platform alongside a very rich and compelling combination of both curated and created education around those issues, and deliver all of those for a minimum of $100. And so we feel really good about the impact work that we're doing associated with not just the strategy, impact investment strategy work that we do, but also this alignment that we have with a number of major NGOs. And for every one of the strategies that we run, we've aligned ourselves with a nonprofit organization. We take 5% of our revenues associated with each one of those individual strategies and drive that money back to the organizations in the form of a charitable contribution. And those organizations include organizations like Conservation International, Water.org, the Elephant Cooperation, Global Fund for Women, and a number of others that are also in development today. So very excited that we're all celebrating this important day together. A lot more work to do, of course, and I think that when we examine where we are as an organization, we're in our infancy in terms of what we can accomplish going forward. And like to say today that we've got finally, after many decades of working in this business, the wind at our backs. So thanks for having me on the call today.
Thank you, Doug. All right, Kristen, over to you.
Hey, everybody. Happy Earth Day. I have to say it's so great to be on the call with each of you who really gets that it's Earth Day and that it's a chance to celebrate the work that we're doing and the work that others are doing for the health of our planet. I was on 2 other webinars today and in the financial industry, and no one recognized that it was Earth Day. And I, of course, accepted those because I thought we were doing this in celebration of Earth Day, and I was the only one to mention it. So I feel like I've come home to my people here, and I'm really appreciative of the organizers and letting us talk about the things we're so passionate about. So like the fellow presenters, I'm in this really because I am concerned about the state of our planet and its people. And so I actually grew up in a trading firm and was kind of in the belly of the beast, literally doing commodities, puts, calls, pork bellies, and really paying attention to the price of different things that we needed, everything from gas and oil to rice, pork, corn, soy. It wasn't feeding my soul, and I wasn't really sure that was the way we were going to feed the world. At the best, you could look at these things as maybe insurance for farmers, but that was a little bit of a stretch for me as well. And I actually became a classroom teacher because I wanted to really make a difference, and I felt that being on the ground, really thinking about educational theory was the best way for me to play. And it wasn't until later in my career where I realized I was sitting on a lot of financial skills that I needed to share, and particularly needed to share with women and people of color who had largely, through all sorts of systems that are interrelated, both in our country and other countries, get left out from the table, and then also left out from the conversation about smart investing. And for me to empower others with their investments, it wasn't going to work with the products that we had. They were boring. They were hard to understand. There was very little transparency, and even the green ones, as Ian mentioned, weren't very green. They were labeled that way, and yet I was seeing lots of systemic risks within these portfolios just when you poked under the hood. Someone else on the call asked about pricing, and I think it's really interesting, just to jump there right away, is that Vanguard, of course, is known for the very smallest prices. And so we all think we're doing really good investing if we go there. And yet the trade-off is that I love the term the zombie money, because that's what it is. It's all, labeled with these ticker symbols, and yet modern portfolio theory got a little bit exaggerated. The need for diversifying, yes, absolutely, but to hold everything that's in the market blindly without looking at it, not a good idea. And that really didn't appeal to me or to most women that I talked to about getting into investing. And so I designed NIA Global Solutions, really to do money with intention and purpose. NIA means intention and purpose. And so every company, being an active manager, I'm on the active side here of the presentation, and we choose every single company according to its product and service and how it's meeting our 6 solution themes. And we only could do one slide today, so I picked this one with the SDGs because so many of them are meeting some of our Earth Day goals. This slide just shows that almost all of the 17 SDGs are being addressed by the NIA portfolio. You'll see number 16 is actually peace and justice, and we have yet to find a publicly traded company whose core product or service is peace or justice. If you know of one, let me know. We would love to include it as long as it has diversity and leadership. That's our criteria to be invested into the NIA portfolio. And yet when we look at these others, we really are addressing quite a large range of solutions. And by investing into the solutions, we're also investing away from the systemic risks. And while I hate that we're in these times of COVID, it actually does show that portfolios like ours are outperforming because we were thinking ahead and around the corner. And so not only do we have those companies that are addressing our greatest health risks, we also have the ones that are providing the renewable energy during these times. And of course, we saw downside capture in a number of ways. I'm sure all of us on this call saw it because we weren't invested in the fossil fuel companies, any of them, so that it's a good time to get in and to, just as others mentioned about fees, yes, the Vanguards and BlackRocks, because of their size, can charge almost nothing, but really you get almost nothing for that. I mean, they're just not that well thought out. And so ours, and I can't speak for all of them, but I'm guessing most of these portfolios have a pretty good dividend anyway. And of course, with prices down, that dividend is up. And so your dividend, more than pays for the fees, and the outperformance should pay for any other thing. But in addition to that, you're going to sleep so much better at night, knowing that the things you care about during the day is what your money is working on during the day and at night. So I've said a lot, and I'll say more in the Q&A.
Thank you, Kristen. Jumping off of being able to sleep well at night and perhaps what we sow in terms of our financial impact, turning it over to Lila.
Thanks, Melanie. Good segue. Let's see. So I'll start. First of all, it's interesting. I didn't know everyone's backgrounds very well, and it sounds like there's a lot of others on the panel who came from international development. And I did as well. I was a Peace Corps volunteer in Panama several years ago. And I think a lot of what I learned there actually applies to my role now in the sense of really understanding where people are coming from and being able to find common ground in unexpected areas. And I, after Peace Corps, went to business school, and I got my MBA at Wharton, which was also sort of not a conventional pathway, but really coming out of that, I was looking to make sure that I could support all of the social causes I care about, and climate change and environmental sustainability being towards the top there, but doing it with a sort of a business mindset and a very practical way to want to see the changes that I know we can make. And I stumbled onto As You Sow's website, and I've now been there for coming up on 3 years as our energy program manager. And if you haven't heard of As You Sow, we wear a few hats, but our main focus is that we are a shareholder advocacy organization. And so we believe that shareholders have power to influence the companies whose shares that we are holding, and that power is not exercised nearly as much as it could be. And so my job is essentially to represent investors, and we coordinate with other investors sometimes in informal groups. So for instance, there's a group called Climate Action 100, which is huge. It has over 100 investors, and I forget the latest tally, maybe 40 trillion in assets under management. BlackRock recently joined, JP Morgan recently joined. So it's getting some heavy managers involved. And what we do is essentially we engage companies, and we're able to go to companies saying, we're holding your shares, we care about the long-term sustainability of your business model, and we're concerned. And particularly with climate change, we think that's, you know, a huge systemic risk that a lot of companies are not sufficiently addressing. And personally, I do work with a lot of utilities as they're making their clean energy transition. We also do work with oil and gas companies. We work with large banks and a variety of other sectors. And part of the formal way that we work with companies is by filing shareholder resolutions. And there's a whole process through the SEC where we can formally request certain enhanced disclosures on climate risk. And a lot of those proposals are seeing really high votes, not necessarily majority votes, but even a vote of, say, 25% shows that a quarter of shareholders care about something that means it's going to get attention from the company. And so, for example, we have a proposal coming up for a vote with JP Morgan. We've actually filed there as their shareholders and asking them if and how they plan to align their lending activities with the goals of the Paris Agreement. And so some of the panelists in the last panel were talking about the lack of the struggles with inconsistent data, and that a lot of companies don't disclose their supply chain emissions. And that's something that we can ask for, and we do ask for. And since it is voluntary, it can be a struggle, but when enough investors get together and show that that we want this information, that helps put the pressure on companies to kind of conform to best practices and get that information out there. And so if you're wondering, you know, how does this apply to me? I'm not going to file shareholder proposals. That's a complicated process. It's not for everyone. You can, if you are holding shares in a company, you can vote. And so a lot of people get those things in the mail and they put it straight into hopefully the recycle bin, but they don't even look at it. And so that is one way that you can exercise your right as a shareholder, is by voting on these proposals. You can vote on board members, you can vote on executive compensation, and you can vote on shareholder proposals. So we encourage folks to do that. It's your right to vote, and you should exercise your rights. Of course, we also recognize the issue of if you're invested in a mutual fund, and one thing in particular that we recognize as a barrier is your 401ks. And so a lot of, I'm in the Bay Area, I'm in San Francisco, a lot of peers work for large tech companies or other organizations, and you usually stick with the default. You don't even think about, what is my 401k doing? And that's where, and folks were asking about this in the chat, As You Sow does provide a suite of tools. So if you go to our website, there's a whole Invest Your Values section where you can find fossilfreefunds.org, deforestation-free funds, weapons-free, a variety of other metrics to look at. And these tools are there really for you to play around and learn what you're investing in. And even if you think, okay, what do I do with this information? You could potentially take that to your 401k manager and just ask. So sometimes there are, you can compare options against each other, and maybe you do have a better option that you didn't even know was available, or you just hadn't bothered to look at it. And if you don't really see anything better, then maybe it's time to ask. And if enough employees ask, there's a chance that the 401k manager or that your employer would pay more attention and realize that there's a demand for that. And as you've heard from other panelists, there are increasing options and increasing innovation in this space, but there also has to be demand for it. So let's see, what else did I have in my notes? Basically, I just wanted to go over that. The tools are, as I said, fun to play around with. You can see the different companies. You can sort by financial performance. You can sort by the metrics that you care about. We use a letter grading score, so you can see who's got an A or a B or a C or worse, and get a sense for that. And really what As You Sow wants to encourage is just for investors to be educated and to know what your options are, and to engage in a way that makes sense for you. And I know for me, it's been fascinating to work with companies that I would say, even in the 3 years I've been in this space, a lot of our conversations have really evolved. So some of the utilities we work with used to say that they would never set an absolute carbon emission target. And then in the last year and a half, tons, not tons, maybe 20, more than 20 have kind of jumped on the either net zero by 2050 bandwagon or something close to it, 80% by 2050. We're seeing a lot of evolution from companies, and it comes down to a whole ecosystem of pressure, and investor pressure is certainly one of those. And so that's what I think everyone on this panel wants to just be more intentional about how we're using that power.
Great, thank you to all three of you. We have a question from Matt Stevenson that he wants to ask live. Ravi, if you'll please unmute him. Or perhaps not right away.
He's,
it
wasn't giving me the option to unmute him. Matt, are you still there?
Sorry, Matt.
Let's see.
That's all right. While we figure that out, we do have a question from Nadia Bolas. What do you think is the biggest obstacle to convince people to stop investing in industries that have obvious negative impacts on the climate or environment? Fossil fuels, of course, for example.
Yeah, Melanie, this is Doug. Maybe I can kick this off. Certainly given the crisis that we're in the middle of right now, we have learned that people don't normally react with any kind of urgency until the fire is burning right at their doorstep or in the house, right? So circumstances like this that we've experienced over the last 90, 120 days is one example of this. It certainly won't be the last crisis that we endure as a result of a changing planet and exploding population growth. So there seems to be a different level of awareness that is starting to build over the course of the last several weeks that people are paying greater attention to these things. I think the other thing that I would say is that, and this dovetails off of what Stacy and Peter had said earlier, that the construct needs to change. That we have this extraordinary opportunity. There are thousands and thousands of students that graduate from higher ed every year. But unfortunately, many of these higher ed academic institutions are still teaching underneath an old model. They're still teaching that shareholder capitalism is the one that we need to be focused on today. Now, there are some more forward-thinking institutions that have changed that and started to embrace this idea of stakeholder capitalism, which is very encouraging to see. But there just needs to be more of that. And this younger generation that's almost 100 million strong right now is really in a position to make significant change as we advance as a society to build a more resilient future.
I'd like to chime in on that as well. I think one thing to keep in mind is the short-term versus the long-term mindset. And what we need from investors is to focus more on the long-term. And a lot of us are within the SRI, socially responsible investor community, but that is clearly not the mainstream. And so recognizing that and also demonstrating that to companies. And so some companies really are conscious of every move that they make and how their investors will perceive that. And for instance, even in the oil and gas industry, we're seeing a lot of differentiation. We're seeing European companies coming out with targets that are not where they need to be, but they're showing progress. And as an investor community, we need to make sure that we're rewarding the kudos where it's due, credit where it's due, but also keeping the pressure on to let the companies know that we are not satisfied with business as usual and that we see a lot of risk in business as usual.
Kristen, anything to add on the topic of how do we get people to move their money away from extractive industries to better funds?
No, it's such a good question, and it's definitely the topic of the day. And so we need to make these opportunities exciting. We have to do it. I'm finding that change happens one conversation at a time. And so really sticking in there for that conversation as often as we can. New Day has made it incredibly easy. You know, NIA is available there for $100, as are many of the strategies from people on this call. So for small dollars, opening up an app and putting in $100, that's pretty darn easy to get started. So I think New Day's doing their part. It's really getting really uncomfortable with the status quo. So just like As You Sow is working on, you know, getting involved, raising our shareholder voices for those of us on the investor side. But I think maybe more action and more voices, even, you know, getting our money out of those bad banks, as other speakers have said. You know, I think the people on this call know, and yet how can we help everyone to connect the dots that they really want to have? Each one of us wants to have our money invested into the world that we want to see, and that where our money is invested creates that world. And I'm hoping that that'll be one of the outcomes of this crisis, is that we can really help get the word out. It's a big lift. They're all tiny little steps that put together, and the patriarchy is alive and well, keeping a lot of us distanced from our money and our investments.
That's very true. We have a live question from Matt Stevenson, which hopefully will work this time. Matt, over to you.
Can you hear me?
Yes.
All right, great. Thank you. So yeah, I mean, the interest in investing for the long term, I think in our generation, the younger generation, is to put your money where your mouth is and hold it there for 50 years and then retire on it. But you can't really do that without diversification. And Andrew Rodriguez answered this a bit in the chat, but in terms of, you know, balancing the new ETFs that are available in the low carbon space, the ESG space, against, you know, really diverse across sector investing to, you know, bond funds and things like that. Is that possible today? And is that something that is, you know, where do we go from there? How do we get there?
Yeah, Matthew, this is Doug Heskey. Thanks for the question. I think that's a good one. And certainly the landscape associated with impact investing and sustainable investing has changed enormously over the last 5 years. In fact, there are few major investment management organizations that aren't or haven't developed significant products addressing the cause of sustainability. Not to say that all of them are good products, right? So I have a philosophy that even though big organizations that with one hand continue to support, you know, the industries that we're trying to diversify out of, or rolling out impact investment strategies, we've created a lot of noise around the space and created important awareness for all the work that's going on in the space. So I do think today, regardless of where you're doing business, it is possible to create a diversified portfolio across sectors and across asset classes, whether you're talking about equity or fixed income. Just within the New Day strategy, you know, there are 12 strategies today. We are working with HIP investor strategies, our own strategies, the NIA Impact Capital strategy. We're introducing the Ethos strategy into our platform here in May, and several more that are coming thereafter. So I think that the opportunity set is going to continue to get stronger over the next couple of years as demand continues to lift in the impact investing and sustainable investing field.
Thanks so much.
Wonderful. Thank you all. Thank you, Matt, for your live question. And bouncing off of that, we have 10 minutes left in this webinar, so I'd like to invite all of the panelists to share one final thought or word that you'd like our participants to leave off with. So we'll give our current panelists a break, but I'll invite Pete to start us off, if you'd kindly share.
Yeah, absolutely. You know, I think that that we're at an important point right now, and we need everybody to get involved. And I think everyone on this call are going to be comfortable in different ways with various levels of involvement. So no matter where you are, explore each of these wonderful platforms and see if it's right for you. Every little bit matters. These are important market signals. And widen the conversation. Talk to friends, talk to family, see what they're doing. And maybe it's not something they think about often, but potentially with just a little probing, they might.
Thank you. Stacy, how about you?
Yeah, thank you. I agree with Pete. I think it's all about increasing the conversations that we're having, because it's I agree. I think, Doug, you said this, the wind is behind us, or maybe Ian said that, and I think it's getting there. I think it could be better yet. And so I think the more we can have these opportunities and really just increase people's understanding and visibility of what they can do, I think that's the key, because I think too often climate is such a big undertaking that it can be intimidating. And so I think everyone, if we can do our part to help people understand that it's, if we all work together, we can really affect change. So
I sure hope so, and so far it seems like it. Noah, how about you?
Thanks. Yeah, thank you, everyone. This has been fantastic. I would echo a little bit of what Pete said about broadening the conversation, both in terms of who we're speaking to and also in terms of including more voices in determining the goals that we're working towards. Yeah, that's it. Thanks.
Thank you. Ian?
I think a lot of it, in getting to the barriers for what's preventing large capital movements out of the climate problems into solutions, is really about framing this beyond environment and social into the common investor language of risk and return, and just putting out there the evidence that investing in climate problems is really risky. And we've already seen a collapse in the coal industry, which previously was considered a safe dividend-paying investment. We're about to see a major collapse in the oil industry. It's also interesting to see what's going on with unsustainable industrial meat right now, with meat packing plants around the country closing down, which of course are not just huge climate problems, but also large social problems. So I think the more we can prove to professional investors, chief investment officers, portfolio managers, et cetera, that climate problems are riskier, and you really need to divest from what used to be considered safe investments, including utilities like PG&E that are causing wildfires everywhere, including the one that destroyed my family's farm here, towards the companies that are forward-looking, that have good governance and are decarbonizing their entire operations. It's simply about better returns with lower risk. And the more we can get that message out there, the more we can really scale up this kind of investing beyond those of us, probably many of us on this call, that would do it because it feels like the right thing to do, to showing the win-win, that it's not just the right thing for people on the planet, but it's just the right thing from a pure risk return portfolio management perspective.
Thank you. Andrew?
So thanks for everybody for being on the call. I want to leave you with something that Pete mentioned a little bit as well. Is you heard a little bit about why we all do this work. It's really important work to be done, and it's hard because we're doing against some of the largest companies in the world, and we're talking about trillions and $trillions of global capital that wants to keep doing things the old way. So consider the firms on this call. Get to know them. Of course, you have to talk to your financial advisors and do all the rest and do it in your appropriate process. Not all of what we have is probably right for everybody. Go and take a look. If you could do that for us, that helps us as we go each day to go do this work, in the middle of the belly of the beast. We make it for you guys. And so take a look and see if there's things in here that make sense to you that can work for what you need your investments to do. Because every little bit of people participating in the things we do makes our mission easier and helps us have a longer path to change the world.
Thanks. Lila?
Sure. I think I want to leave just with the notion that, a lot of the companies we talk to that are stuck in business as usual mindsets, a lot of what we hear is that each company thinks they'll be the last man standing. And we as investors have, we're very sophisticated, and yet when it comes to specific companies saying that they will be the last most efficient producer of something that's causing global destruction, it gets hairy. And so what our message is that every company is responsible for reducing their contribution to this systemic risk, and that this risk is a portfolio risk. So it's something that harms us across the board. And so we as investors need to be recognizing what companies are contributing to that risk and not accepting that.
Absolutely. Doug?
Yeah, so I think that part of the solution here is obviously a redirection of capital. The other part of the solution is really changing investor sentiment and consumer sentiment, which is part of what Ian was just talking about. This generation of younger people, as I was discussing earlier, is 85 to 100 million strong right now. The more important statistic is that 35 to 40% of American purchasing power right now resides in their hands. And if we can get them thinking in a different way about not just how to make investments and to apply their capital as a tool for change, but how to affect their consumer purchases, in directing their consumer purchases towards organizations that are behaving responsibly, that can have an enormous impact, not just for today, but for tomorrow, as these consumers end up growing up and become more financially affluent. And many of them stand to inherit an awful lot of money over the next couple of decades in this transference of wealth. So.
That is a great thought there, my goodness. And Kristen, last thought from our speakers.
Okay, thanks again to our organizers and to everyone for showing up today. And so I think all of the above. Let's reduce our risks, both to our own personal portfolios, also to the planet. I think we're really seeing that values actually drive value when it comes to investing, and we're going to see that more and more, as we move forward. And I'll just say that it could seem like a heavy lift to get a new bank account or a new CDFI account. C-Note makes it so easy to do that. New Day makes it easy. And for those of you that have already started on this path, it feels so good. Once you make one of those moves, it just feels really good. And then of course you'll have the returns to tell your family and friends that you were right. And that feels good too. I mean, there's lots of feel goods about this for the planet, for personally and for your family.
That is a great thought there. I think for my own final thought, that's almost what I want to echo. Prove everyone that told us, oh no, you're being concessionary by conceding something, by investing in your values. No, on the contrary, I'm making a return and seeing value both around me in a more resilient world, socially and environmentally, but also in my own portfolio. So thank you all for attending. I'll turn it over to Ravi to give us the next ClimateLink events and his own final thoughts.
Hey, thank you all so much. Been hiding in the background to make sure my computer didn't totally go into the earth. Just once again, thank you all to the panelists. Thank you all to the attendees for coming out on this, the 50th Earth Day. And what I want to leave you with is, what do you want to see at the 100th Earth Day? In 50 years from now, what's the world that you want to live with? And to do that, we need to get our capital working for us as well. So check out these products, check out other products, and put your money where your mission is. And so please check out our ClimateLink events. Our next one is just going to be a gathering, social and emotional check-in on May 6th. So you can see at the meetup, just where Melanie linked. And then on the 13th, we'll be covering technology to help us reduce food waste. So again, thank you all. To infinite Earth Days. Yes, Noah. So thank you all. I'll leave it open if people want to stick around. And then as we dwindle, I'll just say goodbye. So thank you again. Happy Earth Day, everyone.
Thank you.
Happy 50th Earth Day.
Happy Earth Day, everybody.
Thank you very much to all of our speakers. This was great. I think there's still some Q&As that are left unanswered if anybody dares to give them answers if the speakers are still there. We have one raised hand, actually. Let me see if we can.
Bruce, you're unmuted.
Oh, just a quick question. Where can we go to listen to the recording of this?
That will go out in an email. So I posted, so I'm going to email everyone who's registered for this, all the speakers, their websites, their social channels, as well as a link to the recording of this.
Thank you very much. Great, great presentation from all. Thank you so much for putting it together.
Hey, welcome. Any other questions? Let's see.
I think.
Yeah, a couple questions. Let's see, from Trudy. Doug, this is sort of a Doug, Kristen, Noah question. It seems like you guys overlap a lot and work so well together. You know, I feel like I'm at an overwhelming buffet table right now with so many options to choose from, which doesn't sound too bad. Yeah. So what's the connection between the three companies is the primary question.
So maybe I can start, Ravi, first and foremost, as I had alluded to earlier on in the discussion, we're a collaborator. And so just by way of example, New Day used to run its own gender equality and inclusion fund. And it was a good performing fund, but after we developed a relationship with NIA Impact Capital, we made a decision that we were going to replace our own gender equality and inclusion strategy with NIA's because it was a much more authentic offering than what we were doing. And the reason for that is that Kristen Hull has a very long and distinguished history as a women's leader in running a super unique investment services firm. And of equal importance that she has been a strong advocate and activist in the gender space for lots of other organizations and individuals. So there's no way that we could go wrong introducing that into the New Day platform. Very similar with the relationship that's building for us with Etho Capital. There are a few other organizations that are delivering the type of performance returns that Etho is today. And so it would be inappropriate for us to think about offering a set of climate strategies without at least including the Etho strategy in our platform. So we're very excited about that announcement that's coming up in mid-May, and we think it's going to have great appeal to the 12,000 users that we currently have on our platform.
Great.
And Trudy, we have you allowed to speak if you would like to add anything.
Sorry, yeah, thanks, Ravi. I just wanted to ask a follow-up to that. And so my background and my domain expertise is in energy, renewable energy. And there's a lot of areas you guys are in that I would love to help or get involved in. Is there any way to help in your efforts, like even voluntarily?
Yeah, maybe I can start, Trudy, and I'm sure that this applies to a number of organizations on the call. So we have interns that work for us throughout the year. We have deep relationships with more than 30 academic institutions, and we've got ambassadors at almost all of those institutions that work on our behalf in sort of spreading the word of sustainability across campus. We most recently came out of an exercise with a group of students at NYU that were in the process of building a refugee ETF. They competed against hundreds of other teams and actually won that competition last week. And we're in discussions about potential consideration of that ETF down the road on our platform. And we're working with institutions like Minerva Schools at KGI right here in San Francisco, and a group of students that are working on UX opportunities and issues for us at New Day as well. But there are, I think, suffice it to say, lots of opportunities to get involved.
Awesome, thanks. Can I reach out to you on?
Absolutely. You can find me at doug@newdayinvesting.com.
Okay, thank you.
Anyone else want to chime in about how folks can lend their expertise to their products in different ways?
This is Kristen. I'm happy to say that we have a Changing the Face of Finance internship program as well. And capacity is interesting now. We're trying to figure out how we're going to do this all remotely, because we generally like to have young women in our offices learning with us, being on calls with us, doing things. So we're trying to figure out what that looks like next. And yet we want to keep that strong moving forward. So happy to be in touch about that.
Great. And I can also share out if any other opportunities that come up, and some of our other panelists have left, share it out in the email and into the network, any opportunities that come up.
Yeah, we frequently look for interns or fellows. I think we'll be posting for something probably over the summer, in a few different program areas as well, because I focus on energy and climate, but as you so focuses on other of the issues under the ESG umbrella.
And ETHO is constantly also working with research fellows, often current and recent grad students, in terms of doing the ESG analysis on the thousands of companies we look at. So anybody who's passed, we're always happy to connect with and explore if there's a fit.
Thank you all. Since we're in overtime and optional time, panelists, thank you very much. If there's any of our attendees who have stuck on for the 16 brave souls, if there's anyone that wants to raise their hand and speak live, we'll gladly unmute you and allow you to speak to our panelists.
Is James Regulinski still on?
No.
Okay.
Doesn't look like it.
Okay, then. It looks like we're done.
Dried up the well of questions for the time being.
Yeah.
All right, well, Melanie and Ravi, thank you very much. This was extremely well done. So hats off to you guys.
Thank you.
Thank you. This was fantastic.
Yeah, thank you.
Yeah, we got through a lot. This work.
And
Kristen, we're glad that we were able to celebrate Earth Day on the financial side of things. Marry the money with the values.
So it's amazing how disconnected people are, you know, so disconnected. And yeah, and it's sad. I think their jobs, their careers are going to get so much more exciting when they can connect what they're doing with their clients to what's actually happening in the world. So we are here to help them do that.
yes. All right. Well, thank you all. With that, have a wonderful Earth Day. Have a wonderful weekend. Get your toes in the dirt. Get out in the woods. And see you again soon.
Thanks for organizing, you guys.
Thank you.
Thanks, everyone. Bye-bye.
Thanks, Melanie.
Thanks, all.
Hi, everyone.